welcome in our next guest. Bhat is now joining us. Mr. Bhat, what do you make of the recent rally in the market? What do you think markets are trying to price in? Is there a recovery that you see in FY18?
Well, I think recovery is certainly priced in, no doubt about it. I mean, not exactly at these levels, even earlier recovery was priced in. But I think for a change, we have seen over the last few days that, even foreign investors seem to be liking India. Because for the best part of the last quarter of 2016, from then onwards, I think FIIs have been consistent sellers. So they seem to have just changed their mind over the last few days, and I think that is what is giving legs to this market. In addition, the domestics have been big supporters of the market, and they continue to be so. So I think it is basically flows that are seeing the market at these levels. But otherwise, on a fundamental basis, I don't see the fundamentals supporting the market at these levels, because these levels seem to be quite expensive given the state of earnings and earnings growth. And I think there's a lot of hope that is priced in at these levels.
Right, but with global interest rates being low and the expectation are that they may not rise very fast, don't you think that market valuations are not very expensive?
No, global interest rates, at least the US interest rates, I think the futures market suggests that there is a 70% probability of mid-March hike in US interest rates, and probably another 2 or 3 hikes thereafter in 2017. So therefore, I think that will probably cause some amount of unsettled conditions as far as global markets are concerned. Again, in Europe, we have a situation where there are new elections. The Dutch elections are around the corner, and I think more and more people seem to be worried about the state of Europe, especially the problems that we have had with Greece and stuff like that. They don't seem to be going away in a great hurry, even though the markets seem to suggest that everything is normal. But I think there are undercurrents there also which need to be factored in. And in India, you have the UP elections, March 11th. You are going to get that, and thereafter we have to see how the central government is going to be more enthused about reforms, or probably going to be less enthused.
Right. In terms of global triggers, do you think that's the biggest worry for the markets? Risk-off sentiment, which is now risk-on for a while?
Risk-off sentiment is entirely possible, because if interest rates are hiked in US and thereafter you have some further problems coming out of Europe, which is entirely possible, I think a risk-off can always happen in a great hurry.
Right, but what do you think would be the trigger? Only the US rate hike? Because probability of Fed is already going up. Investors know that now rates have bottomed out and they cannot go down further or remain here. So what do you think, apart from US increasing rates, what essentially could be a risk-off sentiment trigger?
Risk-off sentiment, the way President Trump spoke, I think there could be many accidents on the way. Whether it is a relationship with China, relationship even with the Senate, things like that, I think can probably cause some ripples. Plus, of course, I think Europe is, the problems that we had in Greece have really not gone away, and Greece and Italy are again back in the news as far as servicing their loans are concerned. And I think the Brexit negotiations can probably add one more dimension to the uncertainty, and all these can eventually push markets into a risk-off mode. So I think one cannot rule that out, but it is not the base case as of now.
Right. So let's talk about earnings and what happens in FY18. Do you think there is certainty that now with 4-5 years of base effect coming in, 12 to 14% growth may not be ruled out? Consensus estimate is close to 15.
Well, I think low double-digit numbers are possible, because the base is somewhat low. Plus, even the GDP number that you saw coming yesterday, that was a positive surprise. So therefore, all that negative sentiment built on demonetization and its impact on growth, its impact on earnings, that does not seem to be playing out exactly the way most pessimists saw it. So I think there might be some positives coming out of the economy, and so therefore a low double-digit growth number is possible in FY18.
Right. And what would that mean for the market? Do you think markets have already factored that in?
Well, of course, I think the markets are currently quoting at at substantial valuations, probably 18 times FY18 sort of numbers. So therefore, I don't see the market going up dramatically just because you've got a double-digit growth number in FY18 after a long time. But I think market is bracing for something much better than that. And if there is disappointment there, and then probably markets could ebb down also.
Right, but say if things go in line in terms of Fed hiking rate or what comes in from the global markets or any major currency, and plus the growth rate comes in where the street is expecting, do you expect the markets to consolidate here, or there could still be a downside?
There could be a downside because the market is expecting the best of everything. So therefore, there is certainly going to be some disappointments here or there, either from the international, the way international events play out, or even within India, election results, the passage of GST, and the sort of economic impact of that, businesses being unsettled as a result of implementation of GST. All these could affect growth and could affect sentiment. So therefore, I think for the market to go up dramatically from here, it will require much more than just just sentiment. It needs huge amount of investment from FIIs and domestics to take the market up, to huge liquidity flows for the market to go up from here. But otherwise, based on fundamentals, I think it has more than run its course.
Right. So in terms of flows from DIIs, do you expect it to continue the way it has been?
Well, I think mutual funds have managed to convince most investors that SIP is the way to go, and so therefore these SIP flows seem to be coming in great numbers. And in addition, I think domestic investors also are joining the bandwagon of equities. So therefore, I think the sort of flow that we have seen over the last 1 year, that is something that you can factor as something that can continue. But I think the joker on the pack would be FIIs. If there is a risk of trade internationally, I think there could be some sort of jitters in the market.
Right, and FII selling could mean that they would not look at levels. DIIs still are rational when they buy or sell. But do you think FIIs, when they want to redeem, there is no price level?
Well, I think it is because of reallocation internationally. So therefore, I think if they have to reduce weightage to India, then I don't think levels are very important. And anyway, levels are at very nearly historical highs. So therefore, that may not be an argument at this stage, at least.
Right. We've seen low PE stocks doing well in the last few days. So anything that was attractive, not that well held by mutual funds or FIIs, have done pretty well on any positive news flow. You think that that way the fund allocation is changing? So 2010 to 2016, it was all about high PE, high growth stocks. Now, do you think investors are looking at low PE names as well, which could start to perform very well?
Well, this typically is the sort of the peak that you see, because especially when all other market favorites are at extremely high valuations and growth is not coming forth. So therefore, I think people tend to migrate to the low PE stocks because they have to find value somewhere. And if growth is going to come, probably even the low PE stocks might start performing. And so typically, if you see the low PE stocks performing, typically perform at the end of a rally. And so therefore, this is one more sort of indicator to show that the market may not really go up dramatically from here.
Right. So as you're saying, there are lack of ideas, and that's why investors are looking at this, because liquidity is strong.
Absolutely. When liquidity is there and you have actually bought the same stock that you wanted, you have been buying at probably 1.2 times or 1.3 times, then you tend to look at other possibilities, and that is where I think the low PE stocks come into play.
Right, but as you said that low PE stocks tend to perform at the end of the rally, but that doesn't mean that the rally has just stopped. It could be a while from now before you see a correction.
Well, yeah, these things can go for quite some time. It is not as if just because the low PE stocks are rallying, that is the end. So it might happen. It might continue for a few months. I don't think that is absolutely the edge of the precipice, as it were. I think this can continue for some time, but it has all got to be supported by policy initiatives. It has got to be supported by economic growth, earnings growth. All these have already been factored in. So therefore, it has got to be something much more than that.
Right. In terms of M&A, there is a lot of buzz. So whether you see telecom, whether you see financials, whether you see real estates, metals, everywhere you're seeing M&A buzz from large cap players, buying out some of the other mid-sized or large player names. Do you think that will lead to earning growth? Because after all, it's consolidation which will lead to cost saving for large cap players.
Well, I think that could be one of the motivations, but typically, in a consolidation in an M&A, it takes some time for all the cost savings to happen. So therefore, it is not as if cost savings happen immediately on that, because I think it takes several months, if not a couple of years, for the merged entity to realize all the gains of in terms of cost savings. So therefore, that is not something that can drive markets immediately. But once you have some talk of M&A, then people start gaming that and saying that what could be the ratio like and stuff like that, and that is what is keeping the markets busy these days. But it doesn't mean that all these rumors will end up as facts.
Right, but if you look at M&As, do you think that companies that are in talks to buy out some of these companies are really companies that have done pretty well? They have very strong free cash flows, and now investment opportunities are low, and that's why do you think this M&A buzz is also going around?
Well, at least in the telecom space, the sort of M&A news that is flowing around, that doesn't seem to be happening from a position of strength of both parties. Whereas in banking, there is some news about M&A, and that is something that one has to see. But at least even there, I think it is still at the rumor stage, and everybody seems to be denying this. But even if that were to happen, I think that could probably provide quite some size and synergy for the new entity, and so therefore that is a space probably worth watching.
Right, but where do you expect M&A to happen? So till now there have only been asset sales which we have seen, which has been because of debt. But now do you think 2 companies, 3 companies would start to come together so that they can all grow much faster?
Well, I think most of these M&As are coming about because they see a lot of potential cost saving, and they seem to be there seems to be some destructive competition, and that is why there can be huge cost saving. There is a lot of replication of assets and geographies. So I think that is why people are coming together, and basically they don't have pricing power. That's why they're coming over. So unless there is a strong economic case for M&A to happen, I don't think it will happen just because the market thinks that M&A should happen, because there is hardly any activity otherwise.
Right. Then let's talk about the telecom space, where you were just highlighting that there could be some sort of pricing pressure. Number 2 and number 3 player are reportedly in talks to come together. Do you think the worst in telecom sector is behind?
Well, I don't know whether that you can say that, because we still have huge pricing pressure. Probably most of them are not even making making profits. So therefore, I think one has to really see how the whole telecom space becomes a 3 or 4 sort of operator business, and that is when pricing power can return. Till the new entrant finds enough market share. So till he finds enough market share, I think he will indulge in price competition, and so therefore all of them will continue to do badly till a new equilibrium is formed. The new equilibrium is probably at least a couple of years away. So therefore I don't think there is any immediate possibility of huge gain from telecom.
Right, but in terms of telecom, do you think that now tariffs would start to go up? That will be the main trigger why one would buy. Otherwise, consolidation, any such new freebies coming in is not a reason why one should get excited.
Well, tariffs have not stabilized. Tariffs are still coming down. At least now we have an indication as to how the new entrant is going to price. I mean, that doesn't seem to be, and he's giving an assurance that he'll be 20% cheaper than everybody else. So therefore, this level of price competition is going to continue for quite some time, as I said, till the new equilibrium is found. And so therefore, for us to talk about pricing pressure easing is very, very early.
Right. Mr. Bhat, you spoke about consolidation in the banking space looking very interesting. Do you think we could see some moves coming in? Of course, the SBI move, incorporating its subsidiaries is going to be completed soon. How does it change the landscape in the banking space, where really the cost pressures may not be the driving force?
Well, in the case of SBI, I think it was sort of mandated, and so I don't know whether in other cases, typically if you have seen the regulator gets involved only when when a bank is near sick, that is when the regulator pushes for bank consolidation. At least that should merge with a healthier bank. That is what history has shown us. But if there are two healthy banks, I don't think the regulator pushes for that for an M&A there. So it is basically the owners who need to decide that together we can do much better, and we can create value. Now that is probably that was the case with State Bank of India, where the owner decided that they should all merge. But in other cases, there has to be a commercial case, there has to be a willing buyer and a willing seller, and that does not seem to be there do not seem to be too many of willing buyers and willing sellers. There may be willing buyers, but there may not be too many willing sellers there, and so therefore the regulator may not push this too much. So therefore we really have to see if these willing buyer and willing sellers emerge, and there is a case for value creation, and they agree on a certain ratio.
Right, but on its own, do you like the banking sector? We have seen some of the private sector names move up quite a bit. Do you think valuations are now stretched to look at investment in these private sector names?
See, private sector names have never been cheap. Especially the new private sector banks have never been cheap, but they are the ones who have been performing despite high levels of competition. And the process of the new private sector banks taking market share from public sector banks, that continues. So therefore, I think there is still some scope for money to be made in the private sector banking space selectively, with the public sector banks giving market share away to the private sector banks. And I think that is a sort of trend that would probably continue for some more time, till the public sector banks are in a position to recapitalize and to start lending in a big way.
All right. So when it comes to the financial space, what would be your top picks? Would you look at home finances, microfinance institutions, some of the other NBFCs? Would you look at PSU banks? What would be your top bets?
Well, it will be private sector banks and NBFCs, home finance companies. At least some of them are still reasonably fairly priced. Microfinance is a new business, but I think we need, because they are reasonably well priced. So I think we need to watch this space closely, because especially some of these microfinance companies which are graduating into banks, I think it looks like a new whole different ball game. So I think we need to watch this space, and they are not exactly cheap. So therefore, microfinance companies which are converting into banks, I think there is probably some time you have to give for them to stabilize their operations. But home finance companies, NBFCs and private sector banks, they seem to be reasonably attractive spaces to be investing in if you have to be in the market.
All right. So amongst the financial names, you've given us your top picks. Now, you said that the markets are at a risk of correction should there be any disappointment in even earnings growth. Which segments of the market do you think are less likely to disappoint when it comes to earnings growth?
Well, I think autos, they had a bad run for some time, but I think after demonetization, some of them did not do very well. But I think autos will come back to shape. So this is one space where I think there is still some more value left. As I said, the private sector banks. The other interesting space is probably pharma after listening to President Trump today. Because he said two things. One is that healthcare has to be cheaper. And he also mentioned something about FDA processes being relooked at. So therefore, I think these two things, if he follows through on that, I think that may offer interesting opportunities in pharma, even though quite a lot of these pharma companies have huge problems with FDA as of now. But I think they should be able to address that pretty soon if FDA itself is going to be sort of relooked at in terms of processes in the US.
Right. And which kind of pharma stocks then would you bet on? Those with a focus on generics and a large presence in the US markets, or will it be those pharma stocks with have high IP properties? What would you do?
Well, I think both of them are probably, you will find lots of commonalities in these two things in the sense of those pharma companies having high IPs and large presence in the US. I think they are the ones who will probably tend to gain if there's a change in seen in the US and FDA becomes more accommodative and their IPs get converted into good sales numbers eventually. I think these are the sort of companies which probably are worth taking bets on.
What would you do with IT stocks? Would you avoid them? Because there is still a lot of concern about immigrants in the US, about the proposed changes in H-1B visa, the entire structure there. Do you think IT is not really getting its game back because of the change in the business, and even the commoditized business is going to face some margin pressure?
Well, IT companies, most of these are reasonably well exposed to the US market, and so therefore one has to watch how, say for example, a new healthcare sort of business in US would offer opportunities for IT companies, because if Obamacare is because Obamacare is probably one of the highlights of the IT companies' sales in the US for the last couple of years, and if they are going to revamp the whole thing, probably there are opportunities for the IT companies also. One needs to watch this space quite closely, but otherwise the dollar has been somewhat weak for some time, but eventually I think with the interest rate hike, the dollar would do well, and of course the expectations also even in valuations of growth numbers, if even double-digit growth numbers are sort of not really widely expected as far as IT is concerned. IT is at a reasonably good space, but I think there would be probably some more time correction before we can see that perking up in terms of sales numbers and profitability. So therefore I think IT is a space where one can at best be neutral.
Right, but in terms of IT, if you take example from global companies, what has happened is that over a period of time when IT companies have not grown, because of such high cash flows that they have, or free cash flows that they have, they tend to give big dividends, or they tend to do huge buybacks. Do you think that is a trigger which has now started into Indian IT space as well? We've seen Cognizant doing it, we've seen TCS coming up with a decent size buyback.
Well, I think this should happen, because either they have no business to keep so much of cash unless they do some M&A, and they have been threatening to do this for ages, but they have not done anything significant. So either they should they should find opportunities in their space for expansion. If not, I think they should either buy back or pay huge dividends, and that is something that an example has been set by some of the companies, and I think others would probably follow unless they find great use for their cash, which doesn't seem to be anywhere in the horizon as of now.
Right, but if we look at such M&A such buyback activity, can it continue year after year, which is what has happened globally for some of the companies like IBM? So do you think that can continue for some of the large cap names even here, which will just keep increasing the ROE because the number of shares keep reducing?
Well, early times yet, they're just about to start, and if they generate the sort of cash they have been, I think, and if they don't find opportunities elsewhere for investment, I think that is the most sensible thing for them to do, either high dividends or buyback. One of these two things they should be continuing to do.
Right, let's talk about the auto pack. So, at least in the two-wheeler pack, you've seen a big impact of demonetization in terms of the numbers that they've given. Maruti just declared numbers, decent growth versus, what the street was estimating. So do you believe that two-wheelers, after the sort of numbers that we have seen now, one should only expect uptick?
Well, I think so, because the immediate impact of demonetization has already been felt. And I think going forward, at least the quarters ahead, you will see the normal secular growth that we have seen in two-wheelers continue. And so therefore, that is one thing that might actually be expected to do reasonably well. And that's why I said, this is one subsector where there can be some more money to be made.
Right. So, in terms of two-wheelers, people have aspirations to go and own two-wheelers. They want to buy new two-wheelers, which they could not because of demonetization in the month of November, December, maybe even Jan. But do you believe that as things ease out in terms of cash crunch going into April, maybe May, as more things tend to pick up, do you believe that the demand will come with a lag effect? So people will start, who wanted to buy even in the month of November, December, Jan, as soon as their cash flow ease, they would go and still want to buy that two-wheeler. So demand could actually be very high.
I think demand could improve, because even yesterday, if you see, the agriculture growth numbers have been very good. So therefore, rural demand would start kicking in, and given that interest rates are quite low and consumer finance is rather easily available, and the state of the public transport system in this country, I think there is likely to be secular growth in the two-wheeler business. I don't think there's any cause for worry, except for this small hiccup we saw post demonetization. I think that secular growth would continue. Right.
Just a word on consumer durable pack as well. Do you think valuations there are factoring in full positive, or with unorganized sector now becoming a part of organized, you think that growth for some of the companies like Havells, Voltas could just significantly increase?
Well, I think with some more sort of investment, public investment has been one of the important features of yesterday's GDP number also. So I think with the investment cycle picking up, I think you will find that there is more scope for sales growth here. But I think the top line can only improve from here, and probably valuations are a bit extended. But even then, I think if sales growth continue to show very good momentum, I think there can be some more valuation upside there.
Right. Tactically, would you believe that large caps are now a better place to be than mid caps with the run-up that has continued for 3 years now?
Well, I think I'm not very sanguine about the market now, but if there is going to be a correction, I think probably the large cap would be a better space to be in, rather than the mid caps, where I think they would be they would not be able to capture the opportunities that are going to come on account of the cyclical upturn, as well as the large caps can.